Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for September 17th, 2017. Let's take a quick look at how the markets finished off last week. On Friday, we saw U.S. equities close higher pretty much across the board. The Dow was up 65 points, hitting a fresh new all-time high. The S&P 500 was up about 5 points, also hitting another high. Nasdaq was up 19, hitting fresh new highs, and even the Russell managed to gain 6.5 points. Overall, the week was pretty strong. The three main indexes were higher by a minimum of 1.4%, all led by names, bigger names like the Boeings of the world, 3M, as well as Apple. If my chart would refresh here, well, let's try 3M. Let's try this again. There we go. There's Boeing, nice strong. I mean, this one has been a great performer all year long, taking a break, and now late last week punching through those highs. We have another breakaway here, a breakout on Boeing. That looks like it's poised for more upside. Same with 3M. It really helped these indices close higher last week, and Apple as well looks poised for more gains. Now, bonds last week. Friday up on nickel, not a big deal. Gold pulled back slightly, but still holding that 20-period moving average, which is crucial. And crude was completely flat, finishing higher by about 2 cents. Now, we can see volatility coming into these markets at any point, usually in the fall session as we're leading into that right now. There's a real good bet we'll see some added volatility hit this market. The key to volatility is being able to recognize it and then knowing how to use it. So when you're in a nice, steady, solid trend, like we were back in here on the Nasdaq, you'll see a lot of very similar sized candles with very few wicks and tails, right? Mostly these candles are made up of bodies, right? The difference between the open and the close, not much of a range, though, from high to low. When you hit a period of volatility, what you're going to notice is that you're going to see a bunch of different size candles. You're also going to see a lot more candles with long tails or wicks. This isn't all that bad here. This isn't that great of an example, but usually, the more volatility, the more wild those back and forth swings, and the longer the tails and wicks on those candles. So what are a few things you can do to handle volatility? Because it can be your best friend. It can be a complete nightmare as well. First of all, your first job as a trader is to recognize it. So when you do, you have that choice of whether or not to trade with it or to back off and just do nothing. Okay, because that's always an option. Now, the best way to take advantage of volatility is to lower your time frame. So if you're trading on a daily chart, consider going to an hourly chart, maybe even a 15-minute. If you have time during the day to watch your screen, there's usually some real good trading opportunities when volatility is high on those lower time frames. All right. The other thing is to use some option strategies that go along with it. Obviously, during periods of increased volatility, premiums are going to be higher, so you want to be a seller of options. All right. So there are things you can do to take advantage of it, but it really all starts and ends with recognizing when you're in one of those periods and then deciding how to take advantage of it. Now, this week, kind of a light week for news, but there is an important announcement, and that is on Wednesday, the FOMC meeting announcement. The meeting kicks off on Tuesday. It ends on Wednesday with a conference call from Chair Janet Yellen. We'll see if there's any sort of hints about more rate hikes coming this year. But aside from that, it should be a light week for news. Okay, that's about it for now. Enjoy the rest of your day, and we will see you on our next update.